Hi children, good morning. Today we'll learn how to prepare the realization account. Okay. In the last class we had learned the journal entry and the steps to prepare the realization. What is the first step? That we have to transfer all the asset to the debit side of realization account from the given balance sheet. Okay. And while transferring the asset, we will not transfer cash, bank, if any partner's capital account shows debit balance and advertisement suspense account. This will not be transferred or any loss is there, then that will not be transferred to the realization account. Rest all asset will be transferred to the debit side of realization account. So here we had transferred all the asset. First is that we'll transfer all the asset to the debit side of realization account. From old balance sheet you will get this figure: to land and building, to plant and machinery, to furniture, stock, debtors, goodwill, investment. Now regarding debtors and investment, if provision for doubtful debts is given, that we will record in the credit side and the full amount of debtor will be recorded in the debit side. Same way, investment fluctuation reserve is given, then that will be recorded in credit side and the investment amount will be recorded in the debit side. So first is we have to transfer all the asset from where you will get from the balance sheet. Next is that we will transfer all the liabilities to the credit side. From liability side, we will only transfer sundry creditors, bills payable, outstanding expenses, bank loan or cash credit or bank overdraft. Okay, only these four will be transferred and the amount from where you will get from the balance sheet. Okay. So first we transfer all the asset, then liability. After that, third step is that this asset will be sold or it will be taken by the partner. If the assets are sold, the amount realized will be recorded in the credit side by writing by bank account or cash account. This is the amount of the asset realized, and this you will get details of this you will get in adjustment of the question. Okay, so what is our entry? Bank account debit to realization account when the amount is realized from the sale of asset. Okay, so third step is that we have to sell the asset and the amount realized will be recorded in which side? Credit side. Same way, if any asset is taken by the partner, then that will also be recorded in the credit side under the head partners capital account, concerned partners capital account. This detail also you will get from the adjustment. Next is that we have to pay off the liability from the amount realized from the sale of asset. While paying off the liability, if it is given in the adjustment, you will make the payment accordingly. And if it is not given, any detail is not given in the adjustment, you have to pay it compulsory. Paying off liability is compulsory. The same amount which you had written here in the credit side will be recorded in the debit side by under the head to bank account or cash account. So when the liabilities is paid off, what we have to write? We will record to bank account or cash account. Your liability is paid, and this detail also you will get from the adjustment. If not, then also it is compulsory to pay. Next, if any liability is paid by the partner, we will record it as two partners capital account, liability paid by the partner. So fourth is that we have to pay off the liability. Then next is realization expenses. It is also recorded in the debit side. While making the payment, we'll write to bank account or cash account. If any partner is making the payment of realization expenses, we will write to partners capital account. Then we'll do the total of credit side, we'll do the total of debit side, find out the difference. If your credit is more and debit is less, that means it is a gain on realization and it will be transferred to partners capital account in their profit sharing ratio or equal ratio. And if your debit is more and credit is less, then in that case it is a loss and it will be recorded here by loss transferred to partners capital account. Same given ratio or equal. So in this way, you have to prepare the realization account. So let's summarize this. First step is that you will transfer all the asset from the balance sheet except cash, bank and partners capital account and loss. Then next is that you will transfer the liability. Well, liability you will only transfer creditors, bills payable, outstanding expenses, bank loan account. Next is that you have to realize the asset by sale. Okay, sale of asset will be recorded, and if asset is taken by the partner, it will be recorded in credit side. Then liabilities is to be paid out, that is will be recorded in debit side, and realization expenses will also be recorded in the debit side. And if it is profit, it will be recorded debit side. If it is loss, it will be recorded in credit side. Now let's solve a problem regarding it. So now let's solve the question number 8 of your Davis Grewal book. Here we are having a balance sheet. Okay. Assets and liabilities are given, and the adjustment is also given here that Ramesh took over 50% of the stock at 10,000 less than book value, and the remaining stock was sold at a loss of rupees 15,000. Then debtor were realized at a discount of 5%. Then furniture was taken over by Umesh for rupees 50,000 and machinery was sold for rupees 4,50,000. Creditors were paid in full. There was an unrecorded bill for repair of 1,60,000 which was settled at rupees 1,40,000 in repair realization. Okay. So first what we have to do, we have to transfer all the asset except bank, cash and partners capital account or current account. So here what we will transfer? We will transfer debtor, stock, furniture, machinery. This current account balance and bank will not be transferred to realization account. Only debtor, stock and furniture, it will be transferred to the debit side of realization account. Then from liability side, we will only transfer creditors, bills payable, third party loan if there will transfer. In this question, we are only having the creditors. So creditors will be transferred to the credit of realization account. Next is that we have to sell the asset and pay off the liability, the details of which will be given in the adjustment. Let's see the adjustment and then we'll prepare the realization account. Let's see the first adjustment. Ramesh took over 50% of the stock at 10,000 less than the book value. What is the book value of the stock here? 1,30,000. He is taking the 50% of the stock. That means 1,30,000 into 50 upon 100. Okay? That is 65,000 less 10,000. That means 55,000. Ramesh is taking the stock at rupees 55,000. And the remaining stock was sold at a loss of rupees 15,000. That amount realized for the further stock which is remaining, that we were having a 65,000 rupees stock minus 15,000, that is 50,000. Okay, so the amount realized by sale of stock will be 50,000, which will be recorded as by cash. Then debtors were realized at a discount of 5%. Here value of debtor is 2,40,000 minus 12,000. That is the amount realized from the debtor. Then furniture was taken over by Umesh for rupees 50,000. As asset taken by a partner is recorded in the credit side by writing by Umesh current account. Since they are maintaining the current account, all the adjustment will be recorded in current account. Then machinery was sold for rupees 4,50,000. Here sale of asset, that will be recorded as by cash. Then creditors were paid in full. Liability paid off is recorded in debit side by writing to cash. Then the next adjustment is that there was an unrecorded bill for repairs of rupees 1,60,000 which was settled at rupees 1,40,000. That means we had made the payment of rupees 1,40,000. This will be recorded as rupees 1,40,000 in the debit side of the realization account. No expenses are given, so there will not be record of expenses. Okay. Now let's see how to solve the question here. Now let's prepare the realization account. Okay, so what is the first step of realization account? That we will transfer all the asset to the debit side from the old balance sheet. So here let's see here. So bank and current account will not be transferred, rest all will be transferred. Debtors, we have written here two debtors, stock 1,30,000, furniture 2 lakh, and machinery 9,30,000. This all will be recorded under the head to sundry asset, and the total of this will record in front of sundry asset. Next is that we will transfer the liability to the credit side. In this question, we are only having the creditors. So creditors will be transferred to the credit side 1,70,000. So after transferring the asset and liability, next is that we will do the adjustment. Here it is given Ramesh took over 50% of the stock at rupees 10,000 less than the book value. The adjustment we had done, and we had calculated the amount of stock taken by Ramesh, and that will be recorded as by Ramesh current account. Okay. So if asset is taken by any partner, that will be recorded under the concerned partner's current or capital account in the credit side by Ramesh current account. Same way, assets sold will be recorded in the credit side by cash account. Here we had seen that the remaining stock was sold at 10 less 15,000, that is 50,000. Then machinery was sold for rupees 4,50,000. Here we have written machinery 4,50,000, and debtors were realized at a discount of 5%, that is 2,28,000. We'll write first, we will find out all the total amount of the asset realized by doing the total, and that will be recorded in front of the cash here. So asset realized will be recorded as by cash. Now we had realized this asset. Next is we have to pay off the creditors. Here it is given creditors were paid in full. So when creditors are paid, that will be recorded in the debit side to cash account. We had written 1,70,000. Same way, next it is also given that there was an unrecorded bill of repair of 1,60,000, which was settled at rupees 1,40,000. So we had made the payment of bill 1,40,000. That is also cash payment. So it will also be recorded as 2 cash. So total cash, how much we had paid? 3,10,000. Okay. Now next it is also given furniture was taken over by Umesh for rupees 50,000. Okay. Asset is taken by the partner, that will be recorded in credit side. Okay, what we will write by Umesh current account, that is 50,000. Okay, so let's just revise. First we transfer all the asset to the debit side, then liability to the credit side, then asset taken by the partner is recorded in the credit side under the concerned partner's capital account name, the Ramesh and Umesh. Then asset sold is recorded by cash account, and the total of the assets sold is recorded in front of the cash account. Next, we have to pay off the liability, and that will be recorded in the debit side. Okay. Then we have to do the total of credit side. We'll do the total of debit side. If your credit is more and debit is less, it is profit. And if your debit is more and credit is less, it is loss. Here, debit is more and credit is less. That means the firm is suffering the loss, incurring the loss here. So that realization loss will be transferred to the partner's current account. When the partner is maintaining the current account, all the adjustment will be recorded in the current account. So in which ratio? Here the ratio is given that they are sharing the profit and loss in the ratio of their capital, that is 7:3. In this way, we have to prepare the realization account. Okay. Thank you.